Hey Trey, Ryan from TrendLizard.com here. Thanks for sending me the emails. I got two different emails from you. One to take a look at JPMorgan Chase, ticker JPM, and then also Amazon, an update on that guy, AMZN. Let's take a look at both of those guys. We're going to start with JPM. This is one that I have not looked at before, or at least for the purposes of this video. So we're going to basically be starting fresh back from its inception. I think back in like late 1983. Had some back and forth action. In 1990, it recorded a low, gave us a very nice five-wave advance to the upside into the 2000 high. From there, a large ABC pullback, very clear move sideways, three waves as it should be as a counter trend move. And once it recorded a low in 2009, started a large five-wave advance that has been in play to this point. 1, 2, 3, 4, and 5. So that's where we're at so far. The concern, obviously, is that this five-wave move is getting close to completion, and that once it does, a very large counter trend ABC pullback. Who knows if it'll be this big or what it is, but when you're talking about a 13-year move to the upside, it's going to be a fairly substantial pullback to the downside to correct that. So that is the concern. So we want to go ahead and zoom in on this five-wave move here to try to get a better idea if that high is in or if we are at least getting close. So let's go ahead and zoom in there. So this takes a look at that five-wave move, and I think it's a fairly obvious labeling. There's really only two large pullbacks that happened over this 13-year period. Five-wave move up, there's one larger pullback, and then a pretty consistent third wave up, and then this back and forth move here that fits as a larger pullback for wave 4. So again, just two large pullbacks, wave 2 and wave 4 as it should be. And like so many other things, that puts us in a fifth wave advance off of that 2020 low. So basically, the concern would be once this five-wave move to the upside completes off of the 2020 low, this entire five-wave move will be over, and therefore a much larger correction will begin. Now, a correction of this entire five-wave move points down to this yellow area that goes all the way down to 70, basically. So that would be the risk. I think the bigger risk is that it would take multiple years to get there. If you're talking about a 13-year move, you're probably talking about a pretty substantial correction of the downside. Now, the thing that would be the first real warning of such a correction would be a move below 110, because that would be more than a 61.8% retracement of this up leg here off of the 2020 low. If that happens, we would have to think that a high was in and something larger to the downside had in fact begun. So make sure that level is on your radar. So let's go ahead and zoom in on just this advance off the 2020 low. So here is my take on it. First, second, and then a secondary first and second, third, fourth to make up that larger third wave. And then currently in a fourth wave correction, which has been what makes sense on a lot of different ETF stocks, things of that nature that we've looked at. It appears as if this fits as a fourth wave correction. Now, in order for it to continue to fit as a fourth wave correction, mostly needs to stay above about 115 or so. If it moves much below there, then we'd have to start being more concerned that it's over. And on the last chart, we showed you 110 is kind of the key. That's a retracement of this whole up leg by more than 61.8%. So that would be the concern there. But as is, this appears to be a fourth wave correction. Now, there's been no sign of a low yet. We would need to see some type of indication that a low is in before considering any purchases here. But let's go ahead and zoom in on this counter trend pullback here to see what would tell us if a low is in. So here's a look at that move. Generally speaking, it looks like a counter trend move. You have an ABC here, how we're labeling it, and then all of that being wave A, and then A, B, and C, the sharper move off of February's high, fitting as a C wave decline. If we take a step back, you see it has tested the yellow Fibonacci support area, as you can see here as well. All of this is good. Of course, so far, all it's done is gone lower. We've seen nothing to the upside to suggest that a low is in, so we would need to see something to indicate a low is in. The big one would be a move above 149. That would make this down leg in 2022 a very clear ABC move, so that would be bullish. Otherwise, I just want to see some trendy upside movement on any time frame, on any shorter time frame that proves sustainable and not just something that's a bounce that's heading back down to the lows. So those are the things that we would be looking for. We are bullish, but again, it needs to find a low above 115. If we can get above 149, that's going to look bullish, and then any type of trendy, constructive price movement to the upside could be used as an excuse to think wave 5 up to the upside has begun, and that's ultimately the expectation, a fifth wave up to the upside to complete this advance off of the 2020 low and therefore potentially completing that entire 5-wave move to the upside off the 2009 low. So bullish for now until something changes, but clearly very possibly getting closer to a much more important high. It just doesn't look like we're there yet. So there's that guy. Let's go ahead and move on to Amazon, AMZN. Looked at it a whole bunch of times before. Let's do it again. Just kind of the quick overall view. Incepted at 97, first and second, and then wave, and then everything off of that low in 2001 has been one large third wave advance. There's been no sign of this ending yet. We believe that we're still in this advance. You look at the up legs for wave 1, several years. You look at the up leg for wave 3, took several years. So the up leg for wave 5 we would expect to last a lot longer than it has so far, but it has been stalled for a while. So let's go ahead and zoom in on more proximate action here. Well, I guess this takes a look off that advance of the 2006 low, just being that larger third wave advance. First, second, again, a very clean 5-wave advance for wave 3. Fourth wave pullback, and then in that fifth wave, and so far pretty small relative to the other up legs, and that's why we think it's not yet over. So now let's go zoom in on just this action off the 2020 low. And as we've said before, it looks like it's just stuck in a counter trend move and has not yet been able to complete that. But first we have this nice trendy 5-wave up move, then a bunch of sideways action. There's been opportunities for this to end, but so far it has been unsuccessful at ending. It just keeps chopping sideways, and that remains the case in 2022. So let's zoom in a little bit further here. This is just that counter trend move, nice ABC here, then what we're calling an X wave. You had this big breakdown off of November's high into the January's low. It's really sharp recovery that showed us some serious promise, but it was just as quick to fail and came back down towards the low in late February. So this action here is not looking trendy yet either. So you have a bunch of counter trend movement and then more counter trend movement to the upside. The only real conclusion can be that it's not yet ready to head to the upside. There's no real way to call this a low. So all we can really do is respect additional weakness before this pullback is over and wait for something trendy to emerge off of a potential low. Let's go ahead and zoom in on this 2022 action. This is what I'm talking about. I mean, that move off of January's low, just littered with 3-wave moves. Then you have a move back towards the low. It's possible that we'll get a larger counter trend recovery back towards these highs in February. But either way, no matter how you're looking at this thing, this big counter trend move does not yet appear to be over. So we need to expect more chop. Hopefully we get a move down to a new low for this choppy move. Generally, that's how these things end. And then to start seeing some trendy upside action emerge out of this yellow support area here. And if we get that, then it's a buying opportunity. As is, it's just kind of stuck like so many other things are, moving sideways. So that requires definitely some caution until we see an indication of a low and a resumption of that overall uptrend. So Trey, hope that's what you're looking for. Let me know if you have any questions about this stuff. For anybody else, we do this stuff every day at TrendLizard.com, so come visit us. There's a free trial for a week. You can see what we do, and we'll guide you with all the major things that trade out there, market indexes, stocks, cryptos, and ETFs. Y'all have a good night. Have a great week ahead. We'll talk to you soon. Take care.